this month in November, you're probably going to see something like a mini bounce and then a flush under that. So that's what I'm looking for. The 91.5% puts to 8.5% calls for the S&P 500 last week if we filter for over 1 million in premium. That is very skewed towards the downside. And so far we've seen, if we go over to the chart, the path that I drew in the last video on Wednesday has been following to the T. We saw that drop that I was looking for over here. And now we saw a little bit of that bounce because it did retest this uptrend over here. And now I personally expect it to fall some more. Maybe we see a little bit more of a pop into like 677, 678, but my expectation is still that this goes lower and we create a new local low under the one around 661. So far, been working out really nice and a lot of puts along the way to the downside, guys. You can see here, these whales made a ton of money shorting the top, literally almost top ticked it before it fell. They're up millions now. And then they actually doubled down on Friday, as you can see over here. So they are very bearish on the market so far. And we've yet to see SPY flow like this since like the tariff fiasco back in March/April. So this setup certainly proved to be amazing risk reward. You can see the risk up here that I was looking at from the last video, about 4 points, and then now potential of 25, 26 points of downside on the S&P 500. So wanted to share that quickly here. Now, a couple things I do want to go into. First of all, I want to go back to the flow because some of these orders are pretty aggressive. For example, 6.7 million in premium here for a 641 strike. So that's decently out the money. It expires in about a month from now too. And you can see here, same thing for 1 million. So you're looking at over 7 million, almost 8 million in premium above the ask for this pretty aggressive strike. In this case, you can see even over here, closer to the money, 3 million in premium, much further dated, but still a lot of premium across the board on those. And then you scroll down here, you see some even more crazy ones, like a 637 strike for 3.1 million in premium, 4.5 million in premium, 1.1 million in premium for 639. Like this is pretty crazy, guys, that we're seeing all this. Now you could even see some 635 strikes. Like this is a lot of bearishness hitting the tape. Again, we have not seen stuff like this really in a long time, especially coming out of those bullish summer months and an uncharacteristically bullish fall that we had, despite there typically being bearish seasonality. We just didn't see much of these prints, and now we're starting to see them en masse. 632 strike here, guys, 5.4 million premium. So across the board, a lot of puts. At the bare minimum, probably don't want to go long for much more than a very short dated expiration. Like here, very clearly they were trying to trade it intraday or maybe a multi-day trade for some upside in the short term, like a 2.5 million highly unusual print. So certainly good for like those day trades or maybe 1 to 2 day hold on it, but overwhelmingly bearish for swing holds that we're looking at here across the board. Specifically Wednesday through Friday of last week, we saw a lot more of these prints hit the tape, and you can just see a ton of red just from last week's flow. Now, one other thing I do want to mention on SPY before I go over to some other tickers of interest is dark pool levels that we've seen. Friday actually wasn't that much overall. You could see 1.2 billion in premium, and then over here about 1.7, 1.8 billion in premium for the 671.64 level. But what I did find interesting though, we go to all of last week in terms of dark pool premium, was this one here, 2.5 billion in premium at the 682.67 level. So it looks to be distribution all up here because this is about 2.6 billion. This is about 2.5. So you're looking at a lot of distribution overhead, specifically over the 680 level. So 682, 683, which is now starting to see some sell pressure for more downside. And as I scroll here, not much activity at lower prices from last week so far, just smaller 1 billion prints like here, another one about a billion over here, and then a billion solid here. So really not that much as we go to lower prices, not as much activity around potential for accumulation, which kind of makes you think it's going to fall to lower prices before we start to see buyers step in. So wanted to mention that, as well as one final thing with SPY. Gamma 680 level started to get a lot more exposure Friday, but near end of day, there was actually quite a bit of exposure around the 670, 672 level. You can see there is a put wall right now at 672, 1.4 billion in premium. And then over here is about a billion near the close on Friday as well, around 670. So this level is going to be very critical going into the next week. And it was last week as well, just because this acted as a support initially. But if bulls are unable to hold it as a support, you're going to see a lot more downside. You're going to see that local low that I personally am expecting. So this 670 level, 670, 672 kind of range, I guess you can call it, is going to be very critical immediately on Monday, since if this is unable to hold, if we gap down below it for some reason, you're going to see a lot more downside quickly, probably in a flush type manner as well. So I wanted to bring that to your attention today. Really, the main purpose of the SPY segment here is just the sheer amount of unusual puts we've been seeing. You can see Friday was 96.3% puts to 3.7% calls. So these guys have already been making a lot of money, as you saw from those posts on X. You could see literally millions of dollars in days. So they're already happy, but they continue to double down. So they're expecting some more downside. And if you want to follow up with this flow, see it real time, Cheddar Flow actually has the Black Friday sale right now, which is the best sale of the entire year. So if you've been on the edge, there's literally no better time to start a free trial of Cheddar Flow. Check it out for 7 days. If you like it, you'll get that Black Friday deal, which is actually 55% off right now. So quite a bit. You can just click the link below in the description of this video and can check it out for yourself. But for the next segment here, we have some Tesla flow. If you guys remember last week, I mentioned that there was a key breakdown. I'll actually show you that on the chart really quick before going over the flow. There was this key breakdown here of a previously bullish pattern. And if you guys remember from Wednesday's video, I said this was really bearish, that one, we fell below my pivot, 439.97. That was a very key support / resistance over the entirety of this range. But then two, we actually invalidated a cup and handle pattern. And you guys know, if you've been watching these videos, if you invalidate a previously bullish setup, that makes it even more bearish, because that shows demand was unable to support the breakout. And then you're going to see a lot of shorts pile in as well. Just that's a very clear signal to short something. And the fact that it was unable to hold this level made it even more bearish. So a lot more downside actually happened after that, and puts started to roll in. You could see this very large print as it started to fall down here on Thursday. They made a ton of money as it continued throughout the entire day. They were up millions on those shorter dated puts. So they were able to profit quite a bit. And it does look like it at least made a little bit of a bottoming attempt here on Friday, but this was a pretty substantial move. Like, you're talking around 440 all the way down to 390, 380s even in a very short amount of time. So this one ended up going to fruition for that downside. Originally, you guys remember, I was bullish for that breakout. We saw a nice pump into 470s, but as I mentioned Wednesday, that was invalidated over here with that breakdown back under the pivot. And as a result, we had that flush thereafter, which supported with some of that market weakness. So wanted to mention this as an update here. Another thing I want to mention an update on, you can see they continued to add more and more puts throughout the day over here like this, 2.2 million for the 400 strike for February expiration. I could even show you some of those that we saw specifically on Thursday here for Tesla, where it really started to get unusual. If we go back over to here, there was the giant one, 12.9 million in premium for the 420. So a little bit in the money at the time, but they still made a ton on this one because it was relatively short dated. And as you can see, more so of these very unusual puts across the board. This one's a pretty unusual call, though, a 1.1 million premium, but 480 strike is likely a hedge, especially with the expiration they chose, because it isn't the OPEX. You typically see hedges for these that are like ridiculously far out the money prints in a very short dated amount of time for a weekly contract, just because they're not necessarily directional. At least that's what we've noticed. So wouldn't worry too much about that one, mainly just puts like I mentioned. And lastly, I do want to mention an update on Bitcoin. If I go back to the chart, this one actually broke down below 96,000, which you guys know that is the key level that must hold. And you can see it's attempting to hold over here over the weekend. But this level must hold. Otherwise, that entire thesis of more upside, shooting for like 140,000 plus, is invalidated. Because you could see inverse head and shoulder here. And if you broke down below the right shoulder of the inverse head and shoulder, you're going to see like a pretty substantial flush back down to local lows and below minimum, just because of the invalidation. Very similar to what I showed you with Tesla. Characteristically bullish setup here that attempted to break out. If you invalidate that bullish setup with a breakdown under the structure, which would be this right shoulder here, it's going to flush much lower. So this has to hold. It's basically last resort here for bulls. And if they're unable to hold it, then you're going to see a lot more downside. Otherwise, this would be quite the fake out, to be honest, that it did. Probably got everybody off board just because of how bearish it's looked in the past couple of weeks here. But as of now, needs to hold 96,000 if it can. Honestly, you're looking at like impulsive move in either direction from this point here. You're not going to see much chop from here on out. It's either it's going straight up or it's going to fall straight down, which is a joke in the industry where people say, oh, it could go up or down. This is literally what's going to happen from this point. You guys know I've been bullish on it, of course. So that's kind of my bias if I could give it to you. But In this case here, it's a now or never moment for it. So got to see it have some type of impulsive breakout for that confirmation that a new all-time high will form. Otherwise, this thing is going to fall quite a bit. So that's kind of the risk you're looking at right now around this level. Wanted to provide that update since I've been following through with it. Ideally, it could have done that breakout over here. We had that very nice pump into 126,000 back during this time, but a lot more sell pressure after. So it came down to form a base around these lows. So wanted to provide an update on that. And other than that, that'll be all for me today. As always, appreciate you guys watching this video. I'll see you next time.